Bro, why is there no opportunities in the market today? I'm just sitting over here for the past 15 minutes trying to scan through my watch list and I just don't see anything. I just don't see no opportunities. Looks like I'm gonna have to force a trade today. Yes, let's force a trade. Yeah, this is the one I'm forcing today, guys. Let's enter for a long position right here, and then I'm gonna be placing my stop loss probably below this low right here. Like a quick good low 3 pip stop loss. Let's see how this trade goes, yeah? Let's see how this trade goes. This is a pretty risky one, not gonna lie. This is a very risky trade, alright? Like I say, don't try this at home, kids. Okay, if you're not as proficient at trading as I am, please do not try this at home. By the way, this is just gonna be like a very quick scalp. I'm just getting in here and I'm potentially getting out somewhere around here, right? So it's like a quick little 1 to 5 hour trade. I'm just managing my expectation for this trade itself because, bro, price is crazy right now. It's just been stuck in this massive consolidation. My bias is that price was going to pull back to this demand right here, and then there's going to be sufficient buying pressure at this price point, and that's going to push price up. That is what I think price will do. But whether price actually does that or not, well, we'll see. We'll see, right? That's what trading is about, right? Just developing a trade ideal and then just trusting the market, right? If it happens, it happens. If it doesn't happen, too bad. Obviously, fingers crossed, I'm hoping this shit is gonna happen, because if it is, I'm a freaking genius. Bro, I gotta be a genius, bro, if I actually caught the bottom of the market right here. Bro, if price actually goes up over here right now, I'm actually insane. Not gonna lie, bro, I'm actually insane. Oh shit, price is actually going up. Wow. I did not expect price to go up so fast. I'm actually insane, bro. But anyways, here's my position, right? We're up about like 21k right now. Just in a few seconds. What is going on, man? Bro, we're up about 21k right now. I just made 21k in like 5 seconds. Not 5 seconds, but like, I entered this trade like a few minutes ago, right? To be exact, 6 minutes ago, and we already made 50k, 57k. Bro, I already made 57k just because I've entered into this position a few minutes ago. Master the skill set. The money come as a byproduct. This is what I mean whenever I say that shit, man. Anyways, let me just explain why I entered right here at this exact timing and how I predicted this was gonna happen. Alright, so if you look at this, right now we are trying to scalp, which means that I'm gonna be using the 1 minute time frame for my entry, the 5 minute time frame for me to mark up my point of interest, and the 15 minute time frame to just determine my trend direction and just map out my market structure. One of my students came to me the other day and she asked me, "Yo, Brad, it's so confusing to use 3 different time frames, so I'm just gonna stick to 2." And I was like, yes, you can stick to 2. In fact, I highly recommend you to stick to 2 at first, just to keep your strategy simple. But once you learn how to use 2 time frames, you should learn how to use 3, right? Because having 3 time frames, it allows you to have the ability to actually look at price from different perspectives. This way, you will not get blindsided whatsoever. And in order for you to use 3 time frames fluently like I do, I believe that you just need to keep things simple by remembering that each time frame should just serve one purpose. Okay, 1 time frame, 1 purpose. So for my higher time frame, I use it to identify the trend direction and just map out the market structure and the swing range. That's it. And then for my medium time frame, I use it to map out my point of interest, my supply and demand zones, my order blocks. And then my lower time frame, that is where I use it to look for my entry models. And I only jump down to the lower time frame once price has mitigated a zone that is on my medium time frame. Okay, so 1 time frame, 1 purpose. Each time frame should only serve its individual function itself, right? So this way, you can have a very systematic framework. So in this example right here, 15 minute is my higher time frame, and I've established that right now we are actually bullish because price is creating higher highs, higher lows, higher highs, higher lows, higher highs, and higher lows. Okay, and then this is the range that we are playing within right now. This is the low, this is the high, right? This is the 15 minute internal high, 15 minute internal low. That's it, right? So this is the range where I want to focus on, right? I'm only going to be interested in the price action that is forming within this area itself. Next, my medium time frame at the 5 minute, I want to map out the point of interest where I'm expecting price to pull back to. And ideally, it should be some form of demand zone. Because in the uptrend, I want to be buying at demand zones, right? Demand zones that are strong, that tell us that there is buying pressure and buying momentum. So I pretty much map this demand zone out right here. And this actually is that extreme demand zone that is situated at the last higher low, right? Which means that when price comes down to this last higher low, mitigate this demand zone, price has to respect it. Okay, price has to respect it in order for price to remain bullish. So as a result, that is why I decided to enter for a long position right here. And I only jump down to the 1 minute time frame to look for my entry once price touches this demand zone that we have mapped up right here. Okay, so until that happens, I don't jump down whatsoever. So in this case, if price is like somewhere around here, I'm not going to be looking for longs because price has not come to me. Price has not come to my demand zone. Price has not come to my desired point of interest. If that's the case, I'm not interested in what price is doing. So this is where I wait very patiently. Once price mitigate this zone, boom, jump down to the 1 minute time frame and look for my entry. Now, before I enter for the position, I'm always seeking for liquidity. I'm always asking myself, where is the available liquidity? Because liquidity is essentially the fuel that the market needs in order for smart money to drive price up or down in their desired direction, right? In order for price to get this huge move just like this, it requires liquidity, right? So that's the fuel. So in this case, I'm searching for the liquidity. And there's two types of liquidity, and there is your stop losses, your stop orders, and then there is your timing, right? So as you can see right here, there's a bunch of inducements over here. Price comes down, pulls back, comes down, pulls back, mitigating this demand zone twice, creating a double bottom. And when this happens, guess what? There is liquidity sitting below these lows itself, right? So we are expecting that to get swept. Okay, so that's the liquidity sweep that I was seeking for before I actually entered for the position itself. Right, so later on price came down here, so all of this liquidity, boom, mitigate my point of interest, and I see my bullish confirmation right here, which tell me that the sellers are starting to diminish, right? The selling pressure is starting to fade away, the selling momentum is getting lesser and lesser over time, and the buyers are about to take back control of price, and then this is where I decided to look for longs, right? So yeah, that's pretty much how this entire trade came about. That's how I developed this trade ideal. And yeah, that's how I caught this very nice entry right here. You can see literally the minute I enter for the trade, price just shoot up. And that's because of the second factor of liquidity, which is the timing, right? So right now we are like a few minutes, we are actually 45 minutes into London session already. And you can see London session started somewhere around here, right? But because price was not at a point of interest, I did not want to actually enter for the position. So, and then once price enter into this point of interest, look for my entry model, just nice. We are still within the London session, which is my trading window. And this is where you get a good low snipe right there, right? Just a pretty low snipe right there. Now, when it comes to my stop loss, I place it below this low right here. This is a protected low that swept liquidity. So there's a very high chance that price is going to respect this low here. If price end up taking out that low, then guess what? My trade idea is wrong. Price is going to go down even further and I get stopped out with a small loss, right? I'm able to still protect my downside at the end of the day. In terms of my take profit, I want to manage my expectation because if you look at this right here, price is technically bullish on the 15-minute time frame. But if you look at the higher time frame right here, we have been heavily bearish, right? So if you jump up to the 1 hour, the 4 hour time frame, we are actually heavily bearish right now. So me looking for longs right here, it's not the most high probability setup. Okay, it's not the most high probability setup. So there's a chance that it might not work out, right? Which is why when it comes to me setting my TP, I want to manage my expectation and just place it at a level where I think price will move toward next. Okay, not I wish where price will move towards next, but where I think price is most likely going to move toward next. And that is usually going to be at like this next 5-minute supply and demand zone that I've marked up right here. Yeah, because what can happen is that price can come up here and then started consolidating again, right? Remain this giant consolidation, or it could shift bearish and cause price to go down even further. If that's the case, I do not want to be part of it, right? So I'm much more better off like just getting out at that price point itself. Yeah, so I'll say this is a pretty good price point to exit, and that's where I'm expecting price to move towards next. So now it's just a matter of, you know, not panicking and just holding the damn trade, right? So yeah, right now price is reversing against us, which is expected because when we have such a huge push to the upside, the pullback is gonna be crazy as well, right? It's just the law of gravity. It's a universal law which pretty much says that whatever goes up must comes down, right? So yeah, in this case, whatever goes up must comes down, pull back to a fair value before it can continue going up again, and then later on it will come down again, and so on and so forth, right? Understand the laws of the universe and you'll realize that it's the same laws that govern the entire financial market as well. Oh my god, it's not looking good, bruv. We might have our first loss of this month, guys. Looks like the market in our side today. Oh my god, are we about to get stopped out? This is crazy, bro. I was so excited, guys. You guys have seen my excitement, man. Making 50k in a few minutes and now we wiped out. Hell no. Alright, hell no, man. Not gonna lie, man. This sucks, bro. We are in the red right now. We are down massive right now. This is not fun. Not very fun. And we're about to get stopped out. No, and we're about to get stopped out. No, no. Fuck. There we have it, guys. We literally just got stopped out. Lost about 260k on this trade. Fuck, man. Fucking hell, man. This shit hurts, bro. This shit hurts, man. Not gonna lie, guys. Like, as your account starts to get bigger, as you start to risk more and more on each trade, it's harder to find balance with your emotions. It's like, this could just be like a small loss, but like, oh my god, bro. How the hell did it turn out to be a 260k loss, bro? So yeah, today we lost about $261,000. I'm not gonna sit here and pretend that it doesn't hurt. It hurts a lot. It feels like someone has taken a knife and like stabbed me in my heart. And I think that's when I realized that no matter how much experience you have, no matter how much money you have made, like this month we are up about like 500k or some shit right now. No matter how disciplined you think you are, losing this amount of money but still hit you, right? And I think this is just the reality of trading, right? And this is the part that most people don't see. Everybody's out here talking about their profits, about their wins. Everybody want to post about their freaking withdrawals, the profit screenshots, the big month, the flashy lifestyle. But nobody wants to talk about days like this. Days where you sit there staring at the screen, where you are up like 50k in a few minutes, and then next thing you know, all of those are gone. All of those are just gone in the blink of an eye. And you realize that you've just lost more money than some people make in years. So in this moment, I have two choices. I can sit here and lament about it and complain about how the market is unfair and just complain about things that is outside of my control. I can let this loss define me. Or the second option is that I can let this loss refine me. I can use this as a data point to improve, to find out like what didn't work so that in the future, I can prevent myself from making this same mistake again. I can use this as an opportunity to grow as a trader. Because the thing is, the money is gone, right? Like, it's gone. I can't go back and undo the trade. I don't have a freaking time machine. I can't sit here crying about like what has already happened. The only thing I can control right now is how I respond. And this is a lesson that took me so freaking long to learn, right? Because like for the longest time, I've always just been attaching my self-worth to the P&L. So if I lose money for the day, I feel like shit. If I make money on the day, I feel happy. But nowadays, I'm just numb. I'm just desensitized to both wins and losses. I no longer let P&L define me. I no longer let my P&L dictate how my day is going to be. And I think that's when I realized that I've taken back the control. I've taken back the power back to myself. It's only a loss if you do not learn from it. If I waste this pain right here, then I truly lost. But if I take the time out and sit here in silence and introspect, extract the lesson from this loss, refine my process, and come back sharper, then this is not a loss, but this is a market tuition. And yeah, it's a freaking expensive tuition, but it's still market tuition. So yeah, that's what trading is about. I believe that a trader's job is not to avoid pain, because pain is a constant in trading, just like how losses are the price that you have to pay in order to make a lot of money in this market. There is no light without dark. There is no good times without bad times. Like bad times just like this are what allows you to cherish the good times. Losses just like this allow me to value my profits. It's just part of the game, man. It's just the price that you have to pay. Like this is just a minor setback in the trading journey, that's it. As long as I'm still in the game, this is not the end, right? This is just a small little bump in my account. Not very small, but like what I've always said to all my team members, minor setbacks always become major comeback, right? So I'm looking for the major comeback, man. Bye.